Good morning, this is Bloomberg Daybreak Europe. Happy Friday, everyone. I'm Tom McKenzie in Berlin. We are here just 2 days before Germany goes to the polls. Today, we're going to speak to the DeepL CEO and co-founder, Jarek Kutylowski, on the state of the German tech ecosystem. At 6:40, Sudha David-Wilp of German Marshall Fund, the United States, will join us with her views on the election's most likely outcome. And at 8:30, we are joined by John Kampfner, author of In Search of Berlin. At 9:30, Wolfgang Ischinger, former German ambassador to the United States, shares with us his views ahead of what could be one of the most consequential elections here in Germany for decades. Here are the other stories that set your agenda this Friday. China's tech rally rolls on. Alibaba surging after reporting its fastest revenue growth in more than a year. In Japan, Nissan spikes 11% on reports it may seek investment from Tesla. The US Treasury Secretary tells us sanctions relief for Russia could be on the table. We bring you our conversation with Scott Bessent. Plus, will undecided voters here in Germany dent the lead of conservative Friedrich Merz? We'll have full coverage and analysis of this weekend's election throughout the show. Let's check in on these markets then. Asia in focus for us this morning with a tech rally continuing. AI inspired, Alibaba inspired, the earnings coming through from that e-commerce giant with a focus on the e-commerce platform, but also cloud, leaning into AI, saying the key priority now for Alibaba, this was the message from the CEO, is AGI, Artificial General Intelligence. And that stock is booming in the session, currently up 13% and lifting the broader sentiment across the regional index. The MSCI Asia Pacific Index now up 0.6%, set for 6 straight weekly gains. The CSI 300, the mainland benchmark, is also gaining up 1%. The HS Tech Index is the main beneficiary on the index level of the rally that we're seeing for Alibaba. Currently, that stock, that index, up 4.8%. It had crossed higher by 5%. The rally continues on the China AI theme. Let's flip the board and have a look at futures then as we lead up to the European session. European markets fell around 0.2 yesterday. There was also a bit of profit taking across the US space. Wall Street closed lower. We look ahead for fresh catalysts. PMI data out of the Eurozone will be coming through in the next few hours. European stocks 50 futures pointing lower by 0.1%. FTSE 100 futures in the UK pointing lower by just 6 points, essentially flat. S&P futures, after modest losses yesterday, falling around 0.4%, currently pointing lower by another 0.1%. And Nasdaq 100 futures also pointing down after dropping around 0.5% yesterday. It was Palantir that was lower. It was Walmart with a miss on earnings. JP Morgan also suffering and under pressure by the end of the close yesterday. Nasdaq 100 futures pointing lower by 14 points. Let's briefly look cross-asset then. We've been hearing from other Fed officials and continuing the message around a cautious approach to next cuts for this Federal Reserve. You're back below 450 right now in the benchmark 10-year, currently yielding 448, yields down 2 basis points in the session. Euro dollar at 104, down 0.1%. Dollar strength coming through. We'll see if the PMI data adjusts the mood around the euro. And $76 a barrel on Brent, currently down 0.2%. But oil is potentially set for its biggest weekly gain since January. Gold currently trading close to that 3,000 level, down 0.4% in the session, but still potentially set for its 8th straight weekly advance for the yellow metal. Now, 8 weeks after the Bundestag was dissolved, Germans finally vote this weekend, following an election campaign which has failed to turn around the fortunes of Chancellor Olaf Scholz. Bloomberg's Oliver Crook is outside the Chancellery in Berlin for us. Oliver, set us up then on what to expect as Europe's biggest economy heads to the polls in a vote that arguably is one of the most consequential in decades.
Yeah, Tom, consequential in decades and also has a lot of new features for the German political complex, namely the fact that the AfD, the Alternative for Deutschland, the far-right party, has really been one of the main protagonists in this election campaign. But you mentioned an 8-week election campaign, Tom. This is something that really began on November the 5th, which would really be a fateful day both for Germany and for Europe, both the day that Donald Trump was elected president of the United States and the day that Olaf Scholz's coalition collapsed, in basically paving the way for this election. And if you think think about the timeline here, Tom, November the 5th to the vote today, and then maybe 1, 2, potentially 3 months of coalition building to build a government. This really highlights part of the issue that Germany has been grappling with over the last few years, which is basically not being able to get things done and not being able to get things done quickly. Heading into the polls this weekend, we've looked at basically something that has not changed since that November the 5th, where you have the CDU leading, potentially getting 30% of the vote. You look at that as sort of historic averages, that'll still be quite a bit lower than what we have seen in terms of a leading party in Germany since the basically turn of this century. Merkel was always doing above 30%. The lowest she ever got was about 32%. But much better than Olaf Scholz, who had the sort of lowest sort of governing majority with about 25% of the vote. So what really Friedrich Merz is hoping to do here is consolidate some of that vote, consolidate some of that power, and be able to sort of lead a strong coalition at a moment when, frankly, Tom, not just Germany, but all of Europe needs to move a lot faster.
Yeah, and the polling, of course, suggests that there is very little chance of an absolute majority, as you highlight for us, Ollie. Talk us through the potential coalition options that could come through in the weeks and months ahead.
Yeah, we should say, Tom, that, coalitions are a very sort of normal part of the German political process. There's only been one absolute majority since the end of the Second World War. So generally speaking, you have these parties working together on a number of different issues and for long periods of times at certain points in times. I mean, the CDU right now is likely, potentially, in terms of the arithmetic, could go into coalition with the SPD. We should say that the SPD, Olaf Scholz's party, is expected to get its lowest vote ever in the history of the party. That will likely pave the way for Olaf Scholz to step down, which will make it easier for these two parties to work together, because there has been a very sort of acrimonious political campaign coming into this election. We should also say that there is the possibility that the Greens could just get enough in order to work with the CDU. I've spoken to senior CDU lawmakers who say that despite the fact that they probably have more in common with the SPD, actually on an interpersonal level, they actually get along better with the Green Party, so that could be an option. But Tom, really the worst case scenario, and something we really need to pay close attention to on Sunday, is not really the parties that get the most votes, but the parties that get the least votes, because any party that gets below the 5% threshold of the total vote, they get knocked out of the Bundestag, and then you only need to form a majority with what's left. That completely fundamentally rewrites the arithmetic in terms of what will be possible for coalitions. But Tom, at the end of the day, probably the worst case scenario for the markets is that you see some of that support for the CDU dwindle, you see sort of support for those smaller parties raise, and you have a really super fractured party system going into this weekend, which would make those coalition talks much, much more difficult. Again, at a time, Tom, we need to really highlight 2 years of consecutive contraction in Germany, potentially a third coming, where things really just need to get done.
OK, so we look down the pecking order to see if those smaller parties, the left, the BSW, the FDP and others can get across that 5% line. Oliver Crook outside the Chancellery for us, breaking down, of course, and setting us up with a preview ahead of that crucial vote on Sunday here in Germany. We're going to bring you all the news and analysis, and Ollie will be a central part of that, of course, and market moves as we continue to build up to the German elections, including a special programme when polls close on Sunday, live from Berlin. Now, the Group of Seven is struggling to agree on a draft communique to mark 3 years since Russia's invasion of Ukraine. The Financial Times is reporting that the US is opposing calling Russia the aggressor, threatening to derail a traditional show of unity, threatening also, arguably, to derail the truth. National Security Advisor Mike Waltz pushed back against claims that the United States has not consulted with its allies in Europe as it looks to bring an end to the war in Ukraine.
I just want to push back on this notion of our European allies not being consulted as we've entered into this process. I already mentioned the immediate phone call President Trump made to President Zelensky. He has talked to President Macron of France repeatedly last week. President Macron convened European leaders and then is coming here on Monday. Prime Minister Starmer is coming next Thursday.
Let's bring in Bloomberg's Russia economy and government editor Greg Sullivan with the context. Greg, are the champagne corks popping on Moscow at this point?
Well, the mood in Moscow certainly is pretty shocked right now. The Kremlin was taken aback by both the speed and the harshness of Trump's comments. In many ways, this exceeds their expectations of what they had hoped for in bringing the U.S. to their view on the war. But caution remains. Even as they are happy about what they're seeing, they're very cautious. Russian officials do not understand Trump's negotiating strategy right now. They worry about potential traps down the road. And also, Trump is a famously mercurial person, and he could change stance very quickly. So they're trying to analyze and understand how is this White House operating, what lies ahead, and what is the negotiating strategy here, even as they are happy with what they're seeing.
Okay, happy with what they're seeing, but with a sense of caution. Meanwhile, we're getting a little bit more detail, Greg, in terms of how European leaders are hoping to fill the gap when it comes to defence across Europe and defence for Ukraine as well. What do we know about France's position and what that could mean for the rest of Europe?
Right. Europe has really struggled here to come up with a response to the U.S. They've been shocked and unsettled by the speed and shifting that they've seen. The UK and France are drafting plans for a reassurance force for Ukraine, and Macron has said that he wants to see Europe shoulder more of its military burden. It wants to be more autonomous over the next 5 to 10 years. That really is a response to the Trump administration. The Trump administration has said that they want Europe to shoulder more of the burden of their own security. As you know, both UK Prime Minister Keir Starmer and French President Emmanuel Macron are going to Washington. They are trying to reach out to the Trump administration and head off any kind of risks to the transatlantic coalition or cracks in that partnership that do appear to be showing up early in the Trump administration.
Okay, Bloomberg's Russia economy and government editor Greg Sullivan on the latest when it comes to Europe defence and, of course, the Trump-Russia relationship. Thank you, Greg. Let's see how Asian markets are faring right now. Switching focus, let's bring in Avril Hong, standing by in Singapore. And Alibaba is back and back with a bang, Avril.
Absolutely, and it's delivering a BABA boost, pulling off an NVIDIA-like effect on the rest of the markets, pulling up the Hang Seng Tech, of course, the gauge of tech in China, and that is a rally of 5+%. You're seeing doubling from the 2022 lows, pretty much the highest we've seen it since early parts of that year. And against this backdrop, I thought I'd also highlight how we're seeing the mainland stocks looking pretty positive. It is a tech-fueled sentiment lift, it looks like. Now, dollar yen also in focus. It dipped below the 150 handle just a day ago, but is back above that now amid these comments from the BOJ governor that they would respond nimbly to a sharp rise in yields, meaning bond purchases, sounding a bit dovish there. So keep that in mind as well. Flip the board, take a closer look at the rally in Alibaba after a really blistering 2025, where we've seen about $110 billion in terms of market cap being added. Today's rally adds another 40 billion more around there, and it's also pulling up the likes of Tencent, JD.com, also highlighting the stock of Nissan. Of course, this is a troubled Japanese automaker, which not so long ago we heard how that tie-up plan with Honda would probably be dropped. Now we're hearing that a Japanese group, which is gaining support from a former Premier Yoshihide Suga, is drawing up plans for an investment, and that could potentially be led by the likes of Tesla. So this is the stock reaction, surging well past 10% at one point earlier. Tom.
Yeah, that is a remarkable turn of events, isn't it? Potentially Tesla's investment in Nissan. We watch the details, of course. That is far from being confirmed. But the stock, as you say, is rallying. Avril Hong in Singapore with a check on the Asian markets, where it is very lively this morning. European futures in a very different space. US stocks, meanwhile, falling from an all-time high after the world's largest retailer, Walmart, issued a disappointing forecast, adding concerns about the economy's main engine. Bloomberg's Valerie Teitel joins me now for the breakdown. Walmart is not just a single stock, of course, Valerie, you well know this. This is a finger on the pulse of the US consumer. Are we starting to see the consumer in the US crack?
Well, look, Tom, you take this weak guidance from Walmart in combination with some other readings on the U.S. consumer, and it's not painting a very positive picture. Remember, retail sales last Friday had the biggest drop in almost 2 years. And then we're also getting reports out from the New York Fed showing that credit card delinquencies are continuing to rise. Credit card balances are continuing to rise. It paints a picture quite negative of the U.S. consumer looking forward. And you add that in combination with Fed speak we have of late. We heard from Adriana Kugler yesterday saying there are no rush to cut interest rates again. So it seems like any reprieve, at least from lowering interest rates for the U.S. consumer, isn't necessarily on the horizon. It seems like stubborn inflation and those high borrowing costs really hitting into their bottom pocket.
Yeah, and inflation was brought up, interestingly, by Scott Bessent, the Treasury Secretary, of course, in conversation with our colleagues stateside, as to one reason why he was reluctant, at least in the here and now, to push out issuance further along in terms of those treasuries. What did you make of the comments from the Treasury Secretary and how we should be thinking about bond issuance going forward?
It was the first question as to Scott Bessent out of the gates, how he intends to shape Treasury issuance in the future. He called himself the largest seller of U.S. Treasuries, which I thought quite funny. But he was asked about his intentions of terming out the debt. Take a listen to his response.
That's a long way off. And we're going to see what the market wants. The Fed said that they may stop their balance sheet runoff. So, easier for me to extend duration when I'm not competing with another big seller. It's going to be path dependent.
All right, so terming out the debt is a long way off. He also had some interesting things to say when it comes to his intentions to revalue gold reserves. He said that was not what he had in mind when he mentioned he wanted to monetize the asset side of the U.S. balance sheet for the American people. But questions remain on what exactly he did mean by that statement said a few weeks ago. He also didn't give us any hints on any out-of-the-box ideas floated to weaken the U.S. dollar. There's been some chatter recently about the U.S. Potentially forcing its foreign creditors to swap treasuries for 100-year zero-coupon bonds. But so far, no further color on any out-of-the-box ideas given in that interview.
Yeah, the Mar-a-Lago Pact. We watched that story, don't we, with detail. Bloomberg's Valerie Teitel, thank you very much indeed with an update there on what we've been hearing from the US Treasury Secretary, of course, and the earnings out of Walmart with a bit of a warning on the US consumer. Coming up, what part of tech, or what part will tech and tech startups play in getting this German economy growing again? We're going to speak to the CEO and founder of AI translation platform DeepL, one of Germany's most highly valued startups. That is next. This is Bloomberg. Welcome back. Happy Friday now. As the German election comes into view, the next government will inherit a contracting economy. But what part will tech and tech startups play in getting growth underway again in Europe's biggest economy? My next guest is the CEO and founder of DeepL. It's an AI translation platform valued at over $2 billion. Jarek Kutylowski, welcome to the show. And Jarek, we start with the proposition that the German economy is in contraction, has been for the last 2 years. There will be those in the US who say there is no tech innovation in Germany. That is simply not true. There are startups, there is innovation, and you're an example of that. Could it be bigger? Could it be better? Could there be more value? Yes, of course. What are the key challenges for your tech sector here in Germany right now, Jarek?
I think the most important thing about tech in Germany and in Europe in particular is that there is not enough visibility for that. And we've seen some of the European countries, France in particular, driving a really strong agenda around that. And as I'm looking into the German elections right now and seeing what's going to be happening over the next year in Germany, I would like Germany to really step up on that too. And tech needs really a strong backing from governments. And there's legislative work to be done. But I think from my perspective, the most important part is to drive this cultural change and drive this understanding how future economies are going to be driven by tech and how we have to embrace that.
And Jarek, if you were to have the ear of the next chancellor, whoever that is, what key priorities would you push for?
I would really want the next chancellor to be on the stage with the tech and drive this cultural change, drive the PR for tech, drive the understanding of the whole country for that. There is legislative changes to be done. We still need better tax regulations for making sure that we incentivize young entrepreneurs to really invest their life, to really invest a lot of and do the risk that is necessary to build large tech companies. And I think we should rethink our stance on regulation and how strong we think regulation should be in Germany and in Europe in general.
On regulation then, Jarek, do you have a sense from the leading members of the party, whether it's the CDU, the SPD or the Greens, that they are willing to move away from a regulation first to an innovation first approach that you say they should prioritise?
I haven't seen strong enough signals, I would say, across any of the parties until now to be really as forward thinking when it comes to how regulation impacts tech and how important that is for the overall tech scene. So I would like to see more from everyone.
There's an argument that you can take the industrial base of Germany and then create efficiencies and productivity by layering digital services on top. Is that realistic when you talk to the Mittelstand or when you talk to the industrial base and your clients here in Germany? How willing are they to adopt these innovative solutions and actually push through some of this digitization and innovation?
Yeah, some of the problems for them in terms of adopting a new tech are really in the regulations and how strict those might be and how deliberate they need to be in driving that change. So I think that point is gonna help them quite a lot. I think in the current setup, everybody understands that we need to work more efficiently, and tech for itself can drive a lot of value for the economy, but combining the other industries with tech and domestic tech, even to also get a better understanding of what this tech is about, is going to make a big difference if we can pull this off.
And you and the team at DeepL, look, it's a global business, clearly. But as you look to your future, does it remain in Germany, do you think?
I think we're really, as you said, a global company. So there's a lot of markets that we are operating in. Our strongest market is Germany, and I think it's going to remain for quite some time. So from that perspective, we are keeping to the solid German and European foundation.
Okay, Jarek Kutylowski, DeepL CEO and founder, on what the next German government needs to do to embrace technology and use that innovation to lift this economy out of contraction. Jarek, thank you for your time. Later today at 9:30 a.m. UK time, I'm going to speak with Wolfgang Ischinger, a former German ambassador in Washington and London, so a key voice as well, currently president of the Munich Security Conference Foundation. So stay tuned for that conversation as well. Coming up, Alibaba surges after e-commerce and cloud revenue beats. It's a sign that the comeback for Jack Ma is certainly solidifying. The empire of Jack Ma is back with an AI tilt. We discuss the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday. Let's check in on the Asian markets because, my goodness, tech stocks there are flying. And that is thanks to Alibaba, which came through from very strong results indeed. In fact, you saw Alibaba posting its fastest revenue growth in over a year. The stock is now up around 65% year to date. You can see the rally in the session today, up 13.4%. Because of the weighting across these indexes, Alibaba is lifting the mood across the region. The MSCI Asia Regional Pacific Index then, the benchmark in the region, is currently up 0.6%. The gain's really coming through for HS Tech, which is the index over in Hong Kong that is really tilted towards those tech names, currently up more than 5%. Look at that, 5.4%. Alibaba soaring. CSI 300, that's the mainland China index, currently up 1.3%. The CEO of Alibaba saying that their key priority now is moving and building towards artificial general intelligence. That is putting them squarely head-to-head versus the likes of OpenAI, Anthropic and DeepMind in the race for AGI. And investors are rewarding that tilt. Coming up, Standard Chartered announces a $1.5 billion buyback after reporting fourth quarter earnings that beat estimates. So from tech to the banking space, we're going to speak to the CFO of Standard, Diego Di Giorgio. That is coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in Berlin. These are the stories that set your agenda. China's tech rally rolls on. Alibaba surging after reporting its fastest revenue growth in more than a year. In Japan, Nissan spikes 10% and reports it may seek investment from Tesla. The US Treasury Secretary tells us sanctions relief for Russia could be on the table. We bring you our conversation with Scott Bessent. Plus, will undecided voters here in Germany dent the lead of Conservative Friedrich Merz? We'll have full coverage and analysis of this weekend's election throughout the morning. Let's get to the markets then, and in focus for us right now is Alibaba. The stock surging double digits on the back of a beat in terms of the e-commerce and cloud story, and the CEO saying that artificial intelligence is now the priority for this business. Alibaba and Jack Ma are firmly back in the front seat, and you can see the gains coming through in the session today. The stock is up about 65% year to date. Let's check in on the futures. European futures searching for direction. A bit of a similar story for US markets as well. You saw some losses yesterday in the US, the S&P and the Nasdaq down between 0.4% and 0.5%. Some pressure coming through for the likes of Palantir in the tech space. Walmart taking a big hit lower as well on a slightly softer outlook for the consumer and for demand for that retailer. JP Morgan also saw some heavy losses and selling yesterday. European futures currently flat. As I said, looking for direction. FTSE 100 futures pointing lower by 0.1%. S&P futures lower by just 0.1% as well, looking to drop 3 points. Nasdaq 100 futures also flat. These equity markets in Europe and the US are certainly struggling for the next step, and a direction seems to be lacking. Let's flip the board and have a look across asset then. You've been hearing from Fed speakers again reiterating their cautious approach to future rate cuts. The 10-year is back below 450, currently at 448. Yields are down 2 basis points. The euro dollar close to 105, just down 0.1%. Brent at $76 a barrel, set for another strong week of gains, though, if you look through the previous days. Currently down 0.2%. Gold closing in still onto that 3,000 level, just taking a bit of profit in the session today, down 0.3%, but the run-up in gold has been pronounced. Now, Standard Chartered is set to return another $1.5 billion to shareholders. This as the London-based lender reports fourth quarter earnings that beat estimates. Let's cross over to London right now, where Bloomberg's Anna Edwards is standing by, ready to speak to the CFO of that bank. Anna.
Thanks very much, Tom. Yeah, I'm really pleased to say I'm joined by Diego Di Giorgi, who is the CFO of Standard Chartered and joins me here on set in London. Diego, nice to have you with us this Friday morning. Thank you for coming in. So the numbers themselves coming in better than estimates, returning $1.5 billion to shareholders. You've given some guidance this morning. I wonder whether the guidance looks a bit conservative. That's one of the conclusions coming out of one of the analysts this morning. How do you rationalise the guidance you're giving?
Well, look, we upgraded our guidance at Q3, and in the meantime, we have delivered another strong repeat performance by our engines of growth, financial markets, banking, and in particular, our wealth management business. And it's really been consistent delivery quarter after quarter. And that has allowed us to reach 11.7% return on tangible equity, which is a 160 basis points increase on last year. When you think of it, we're really delivering top-line growth, 14%. And we are marrying with returning capital to our shareholders. And we've announced, as Tom just said, another $1.5 billion buyback,
yes.
Which, when you think about it, really means that we are delivering what we have promised to our shareholders, which is sustainably higher returns from our high-growth business in our high-growth markets.
OK, and a lot of banks have had the experience of being assisted in this activity by higher interest rates, and net interest margin benefits from those higher interest rates. What are you assuming for this year? And therefore, could your numbers do better if rates are not cut as much as maybe we were expecting recently?
So the environment might be a little bit more conducive than we were expecting up until a few months ago. But first of all, let's remember that in terms of contribution to the top line, our net interest income contributes about 50%, and our non-net interest income contributes about another 50%. Non-net interest income has very strong engines of growth, up 20% last year, as we have just discussed. And in terms of net interest income, we have been building up our hedges, de-risking the delivery of net interest income, and I think that positions as well for this slightly more uncertain world.
OK, so let's turn to the other part of that of the income stream and away from net interest margin and the other areas. One of the areas I want to ask you about is global markets and what you've managed to achieve there in the global markets business, getting a boost from some of the volatility in markets, it seems, traders doing well on that. And that's been a story across Wall Street, across lots of the banking sector. Thing is that sustainable in any way? Do you have any visibility on whether that kind of performance is sustainable?
So I think it's sustainable for us. And the reason is that our markets business, as we often like to point out, is a peculiar type of market business. Because we are a giant connector bank, really 75% of what we do in markets is helping our clients manage their exposures to foreign currency, interest rates, and other risks. That is very recurrent activity. When volatility then spikes, we add to it performance in helping them take advantage of those market dislocations. But the delivery of our financial markets numbers is highly de-risked once again by this attractive complexion of the business, and it's business that, by the way, grows well. We pointed out at Q3 at our last set of results that this part of the business grows at almost 10% per annum, and it's been doing so for 5 years.
Yeah. Okay. So you're confident in the sustainability of the performance there. In terms of the wealth management side of the business, or managing money for increasingly wealthy people, that's another revenue stream that you have. What do those conversations look like at the moment? Are global investors, are they talking about, well, there's still no alternative to being invested in the United States and that tech story, or is it a much more global narrative? How is it shifting?
So for us, for Standard Chartered, it's a very global narrative, in particular because of the nature of the wealth management activities that we do. While we are present across the continuum of wealth management, all the way up to the private bank, the core of what we do is really with affluent customers. These are customers that have with us $500,000, $1 million, $2 million. These people really save and invest with us. So that kind of debate, although the type of products that they use might be shifting over time, is really focused really on the long term. From that point of view, of course, we are assisted by the incredible secular trends that we have in our markets. Our markets are the fastest growing ones in the world, and the places where most of the wealth, 2/3 of the wealth of the middle class over the course of the next 5 years, is really going to be created in Asia, Middle East, and Africa.
Yeah, and that's where the business is focused. Let me ask you about the share price performance, because Bill Winters, the CEO, quite famously recently described, or a year or so ago, described the performance of the shares as crap. I wonder if you have a different word that you'd like to use now, because now the stock has caught up with the rest of the European banking sector.
So, one word, 3 words, more to do. I think we've done well. I think, and by the way, we don't manage to the stock price. I mean, we manage the bank. We try to deliver sustainably higher returns. We try to return excess capital after we have invested heavily in our business so that we can deliver those sustainably higher returns. But it's true that we've had a good performance. But, we keep our eye on the ball, we continue executing, and we hope that the market will continue to reward us. But there is more to do, no doubt.
There is more to do. OK, we'll take that message. In terms of the way that you reward staff, we're sitting here in the UK, Diego, and here in the UK, you've got more flexibility to pay staff with bigger bonuses since some recent regulatory changes. How important is that in the global competition for banking talent?
Very much so, Anna, in the sense that it's truly a global competition. And look, a few things here. We've always been aligned with the industry, and we intend to be aligned with the industry going forward. And this shift towards more performance-related pay, I think, is ideal. It aligns the interests of our colleagues with the interests of our shareholders, and it enables us to attract talented people, which is what we need in order to serve our clients in these uncertain and more fragmented times.
Yes, more uncertain, more fragmented. And you've mentioned how some of that volatility helps on the global markets business, for example. And there's a lot of need to perhaps hold investors' hands through a lot of this volatility. I wonder if that drives opportunity, actually, when you're managing money for wealthy global investors. If there's a lot of volatility and a lot of uncertainty, does that mean they require more or different things from you?
Very much so. And by the way, allow me to take one step back for a second. There is a lot of discussions about deglobalization, lack of growth, etc. First of all, the world is growing strongly, and it will continue to do so. Deglobalization is just globalization shifting towards new corridors. And these new corridors of growth that globalization is shifting towards are the intra-Asian, Asia to the Middle East, Asia, Middle East and Africa corridors that Standard Chartered really sits astride.
But there's less overlap between those corridors in a deglobalized world.
There might be, but the diversification effect of all of that will lead to a continued set of flows which are going to be more fragmented. And that fragmentation, that complexity of navigating this environment is what our clients look to us for help.
Diego, thank you so much for joining us. Very nice to speak to you this morning. Diego Di Giorgi, the CFO of Standard Chartered. Tom.
Anna, thank you very much indeed. Excellent conversation. Anna Edwards, opening trade anchor in London alongside the CFO of Standard Chartered. Now to the US, where the Treasury Secretary Scott Bessent, of course, says sanctions relief for Russia could be on the table in talks over the Ukraine war. Bessent told us that President Trump is committed to ending the conflict very quickly.
I think President Zelensky, unfortunately, escalated and has put some daylight between.
How did he escalate?
A lot of his remarks in Munich, I thought were inappropriate. President Zelensky, when I met with him, assured me that he'd be signing the minerals deal in Munich. He has not. And look, the real purpose here, and I think it's turned into kind of this media circus, that President Trump had a very elegant plan, and it was bring the Ukrainians closer to the U.S. Let's do this economic deal. And even Karl Rove in the Wall Street Journal this morning approves of it, that the U.S. with greater economic interest in Ukraine provides a security shield. So the sequencing of what was going to happen was bring the Ukrainians closer to the U.S. Through economic ties, convince the American people and the American public, get them on side, and then tell the Russians, go to the negotiating table with a very fulsome message that if we need to, we will take sanctions up.
Well, what about tapping the Russian frozen assets, some $300 billion? Would you force your European counterparts to not just have them frozen, but actually tap them? Trump talks about repaying the American taxpayer. Shouldn't Russia be a part of that?
Well, what's happening now is they are being tapped. So the returns from
the interest,
the returns from the freezed asset pile is going to pay the Europeans. You know, what's very important to understand here is that everything the U.S. has done to date, the American people, the American taxpayer, is grants. The Europeans, roughly half of what they've done are loans, and the runoff from the frozen assets is being used to repay European loans.
Have you communicated that to the Europeans, that you're upset with them?
What's that?
Have you communicated to the Europeans that you're upset with them?
I think Vice President Vance did a pretty good job in Munich.
Do you think they understand that the United States is running a deficit of north of 6%, close to 7%, and that the budget for defense is north of $800 billion? Do you think they understand the gravity of the moment in the United States, the U.S. perspective?
Look, I think that they understand that President Trump, during his first term, this term, Vice President Vance, and the entire security apparatus have told them that many of the countries are deficient in their NATO spending, and they need to come up.
US Treasury Secretary Scott Bessent speaking with our colleagues on Bloomberg Surveillance. Now, Israel says a body returned as part of a ceasefire agreement with Hamas was not that of a mother taken hostage with her two sons in October of 2023. Yesterday's exchange happened as negotiations for the second stage of the ceasefire are due to start. Our Middle East team leader for the region, Paul Wallace, joins us now. Paul, what are the details of this exchange?
Hi, Tom. As you mentioned, one of the four bodies that was handed over by Hamas yesterday as part of the first phase of the ceasefire and the hostages for prisoners exchange was not who Hamas said it would be. It was meant to be a 33-year-old mother, and after Israel did forensic tests to identify the bodies, it found out that this one was not her. Her two children, who Israel says were murdered, were identified, and it was them, as was a man in his 80s, but she wasn't. So there's obviously some confusion now. Israel doesn't know who this person is. The body doesn't match the records of any of the hostages taken on October the 7th, 2023. It is fueling a lot of anger once more within Israel about what Hamas is doing and the way it is conducting these hostage exchanges. The next thing is Saturday, when 6 living hostages are meant to be released, and more Palestinian prisoners will be freed from Israeli jails. So this ceasefire is continuing, but it is certainly shaky, and there's no guarantee it's extended beyond the deadline of early March.
Okay, so we look to Saturday to see if that release happens as part of that ceasefire. Paul Wallace in Dubai with the latest out of the Middle East. Thank you. Coming up, we delve into what is at stake as Europe's largest economy heads to the polls. Sudha David-Wilp from the German Marshall Fund joins me next for her take. Germany goes to the polls on Sunday. Stay with us. This is Bloomberg. Welcome back. On Sunday, Germans will be voting on what could be one of the country's most consequential elections in decades. To help us delve into what's at stake, I'm very pleased to say I'm joined now by Sudha David-Wilp, VP of External Relations and Senior Fellow at the German Marshall Fund. Sudha, thank you for joining us. Talk to us about the potential outcomes post-Sunday. We know it's going to be weeks, potentially months, to form a coalition. What is your best gauge right now of the most likely outcomes after this hugely consequential vote?
Good morning, Tom. Yeah, it's still very hard to say what the outcome will be after Sunday's vote. One thing we can say is that Friedrich Merz, the head of the Conservative Party, the CDU, is poised to be the chancellor. The question is, will he only require one party to work with, or will it be a 3-party coalition, which proved to be unwieldy the last time around? As we all know, the traffic light coalition collapsed last November because of massive infighting. So if the small parties make it in, it will be hard to form a 2-party coalition. If the smaller parties, the FDP and 2 parties on the left of the political spectrum, make it in, it may require 3 parties that Friedrich Merz will be looking to meld together to form a governing majority.
The list of challenges for the next government is long and significant. What, for you, should be the priorities of the next government? The first 1, 2, 3 priorities in the first 100 days?
Well, on the domestic front, most voters are very much concerned about migration. As you know, there's been a spate of migration attacks on German citizens on the part of migrants over the past couple of months. And of course, there's worries and anxiety about the state of the German economy. Now, these 2 issues are actually linked to geopolitical changes that Germany is facing. And I think the next government has to be equipped to make bold reform so that Germany could sort of position itself alongside Europe as a capable global actor. And those issues are going to be defense spending, spending on innovation, and also spending on infrastructure, as well as maintaining Germany's social market economy. But that means there's going to be a serious question about reform of the debt brake or setting up some sort of special fund again.
Well, so look, no doubt you have your finger firmly on the pulse of the body politic of Germany, and you speak to lawmakers, I'm sure. What is your sense, if we do get that grand coalition, if the political arithmetic lines up for the CDU and the SPD to partner, what is your expectation that lawmakers here are actually ready to push through those reforms, whether that is adjusting the debt brake, spending more on defence? Are they ready and willing to do this if the political arithmetic is there?
Well, this time a grand coalition definitely faces so much pressure on the outside as well as within. The last time Germany has had grand coalitions was under Chancellor Merkel, and she really governed from a comfortable position in the middle. She had 3 grand coalitions during her 4 times in office. But this time around, I think German policymakers know there is no time to just cater to the base, and it's not business as usual. If they don't make reforms, it will seriously jeopardize Germany's position and Europe's position in the world, as well as give the AfD perhaps even the far-right party, a better outcome the next time around Germany faces a federal election.
Is the AfD better positioned, do you think, right now? Is the AfD charting the course of the national rally in France?
Well, interestingly enough, the AfD has also been quite stable in the polls. It's capitalized on fears about migration and economic anxiety, as well as with Russia's full-scale invasion of Ukraine. But sort of the endorsement of Elon Musk and Trump and his circle of supporters, specifically Vice President Vance's speech at the Munich Security Conference last weekend was quite clear about Trump's position on support of the AfD, has not necessarily moved the needle for the AfD. Most voters are with the AfD because of its messaging on migration and economic paralysis in Germany.
Okay, so the David-Wilp with the analysis ahead of these very consequential elections in Germany. VP of External Relations and Senior Fellow at the German Marshall Fund. We appreciate your time this morning. Thank you. Let's bring some more coming up. We're going to give you a breakdown of some of the PMI data expected out of Europe later and a touch on Alibaba. Shares there soaring again, double digits. Stay with us. This is Bloomberg. Welcome back. Happy Friday. We're going to get some data that tells us a little bit more about the health of the Eurozone and Germany as well as we head towards the elections here on Sunday. There's a sign that the PMI, so manufacturing and services, are actually starting to turn around. Here's the manufacturing PMI. Even Germany, that's the light blue line here, is starting to pick up. Yes, below the 50 line that reminds us it's in contraction. You have to be above 50 to get into expansion. And so far, only the US is in that enviable position. But even the UK and Germany are starting to see a pickup. And we'll see if the data later today that crosses in the next few hours will confirm that trend. Green shoots, maybe, for the German economy and those of the Eurozone and the UK as well. Let's flip the board and have a look at what the stock performance is suggesting. If you get a positive, at least market positive outcome when it comes to the election here in Germany on Sunday, a grand coalition, then maybe look to the MDAX. That's the mid-cap stocks listed here in Germany. They have underperformed by about 20% since 2021 versus the DAX. Exposed to the German economy by about 40% in terms of revenues versus 20% for the DAX. If you do get a market positive outcome, and that would be that grand coalition, then look for the MDAX maybe to play catch up. Let's briefly check in on Alibaba. That stock again surging on the back of very strong results and leaning in to AI. That theme continues. The stock is up double digits in the session today. Year to date, Alibaba is up about 65%, and that's leading and lifting the broader Asian markets in the session today. Coming up, we're going to bring you the news, analysis and market moves as we continue to build up to the German elections, including a special programme when polls close on Sunday, live from the capital. The opening trade, though, is up next. Stay with us. This is Bloomberg.